Ever feel like international taxes are, well, a bit of a maze? Trying to figure out income from different places?
Oh, absolutely. It can get really complex, can it?
Yeah,
Untangling all those cross-border rules.
exactly. So today we're diving into something that can really help simplify things if you're based here in the UAE.
You must mean the tax residency certificate.
That's the one, the UAE Tax Residency Certificate, or TRC. We've looked at some excerpts, some official info on it.
Good stuff. It's a key document for many people and businesses here.
Right. So our mission today is to pull out the really important bits, what it is, why you'd need one, who qualifies, how to get it without, getting lost in the weeds.
Sounds like a plan. Let's break it down.
Okay, so first things first. What exactly is this tax residency certificate?
Well, fundamentally, it's this official paper, yeah,
Yeah.
issued by the UAE government,
Okay, official paper verifying what exactly?
that you or your company are basically considered a tax resident right here in the Emirates for tax purposes.
Got it. And I've heard it called a tax domicile certificate too. Is that the same thing?
Yeah, exactly. Tax residency certificate, tax domicile certificate in UAE. They're pretty much interchangeable terms, both, officially recognized.
Okay. And the main point, why get one? What does it actually do for you?
Well, the big thing is these double taxation avoidance agreements, DTAAs for short.
Right, I've heard of those.
The UAE has a massive network of them, like agreements with over 130, some sources even say up to 146 countries.
Wow, that's extensive.
It is. And the TRC is basically your key to unlocking the benefits within those agreements.
Okay, so benefits, like avoiding double taxation. That sounds like something everyone wants to avoid.
You bet. And that's where the TRC really shines, especially with these DTAs.
Right, tell me more about how that works. How does it stop the double hit?
Well, imagine you earn money outside the UAE, right?
Right.
Maybe from investments or clients abroad.
Yeah.
Without a TRC and the right DTA in place, you could potentially get taxed twice, once where you earned it and again here.
Ouch, nobody wants that.
Definitely not. The TRC, presented in the other country, essentially proves you're a UAE tax resident, allowing the DTAA rules to kick in and prevent that double tax burden.
That alone sounds like a huge reason to get one if you have international income. Are there other advantages?
Oh yeah, several. Another big one is credibility.
Credibility, how so?
Having that official TRC just adds a layer of legitimacy when you're dealing with, say, foreign tax offices or maybe international banks or organizations.
Ah, okay, so it smooths things over internationally.
Exactly. It streamlines transactions, can improve access to services abroad. It's like an official stamp saying, yes, this person company is properly established here.
That makes sense. Does that credibility translate into, like, actual financial perks beyond just stopping double tax?
It can, yes.
Yeah.
Through those DTAAs again. Holding a TRC can mean you get more favorable tax treatment on certain income streams from treaty countries.
Like what kind of income?
Things like dividends, royalties, interest payments coming from abroad. The DTAA might allow for a reduced withholding tax rate, or maybe even zero tax withheld at source.
So less tax taken off before the money even gets to you.
Precisely. And that can add up to really significant savings over time, especially for investors or businesses with international IP.
That's a direct cash benefit. What else? How does it help with, say, planning?
Well, having that certainty about your tax residency status is massive for effective tax planning and, structuring your affairs.
How does certainty help there?
Knowing for sure where you stand tax-wise lets you make much better informed decisions about investments, business strategies, how and when to repatriate income. It just clarifies things.
Right, it removes a big unknown from the equation.
Exactly. It helps you optimize your overall tax position. It provides that stable base for planning.
Okay, and what about businesses doing actual trade, import-export stuff?
Yeah, for UAE companies trading with DTA partner countries, the TRC helps clarify their tax obligations over there.
So it makes cross-border business smoother.
It can, yeah. By removing potential tax hurdles or ambiguities, it just helps facilitate that international commerce. Less friction, basically.
Okay, this TRC sounds pretty essential then for anyone operating internationally from the UAE. Now, who actually gives out these certificates? Is it one specific place?
Yep. It's all handled by the Federal Tax Authority, the FTA. They are the sole issuing body now.
The FTA, right. So just one central body.
Exactly. Which is good. Keeps things consistent,
Yeah.
Especially for these international agreements, reliability is key.
Makes sense. And is it only for those DTAA benefits? Or other reasons too?
Primarily for DPAA purposes, that's the main driver. But the FTA also issues them for domestic use.
Domestic use. Like what?
You might need one just to prove your tax residency status to a local bank here, or maybe another institution within the UAE, just general proof.
Okay, good to know. And how do you actually apply? All online now. Do you have to go into an office?
No, thankfully it's all online. It's done through their portal, Ameritax. That's the FTA's main digital platform.
Ameritax would be it.
So you'd log in there, you might need an existing account or create a new one. Sometimes they link with UAE Pass too. If you had an account in the older system, you'd link that across.
Digital first, that's good. So who can actually get one? Let's start with individuals, people like you and me. What are the criteria?
Right. So for individuals, there are basically three main ways or pathways
Yeah.
to qualify. You just need to meet at least one of them.
1 out of 3. Okay, what's the first path?
The first one is about showing the UAE is your primary place of residence and the center of your financial and personal interests.
Center of interest. That sounds a bit vague. What does that actually mean in practice?
Well, it is a bit holistic. They look at a whole bunch of things where you work, your job location, family ties, social connections here, cultural activities where you manage your property or assets. Basically, where your life is primarily anchored.
So it's not just about having a house here.
No, it's broader than that. It's a judgment call based on all those factors. Is the UAE really your main home base?
Okay, that's option 1. What's the second way to qualify?
The second one is much more objective. It's about physical presence.
How long do you need to be here?
More than 183 days physically present in the UAE within any relevant 12-month period.
Oh, for half the year. Do those days need to be all in one block?
No, they don't have to be consecutive, just total days within that 12-month window.
Okay. Any catches with counting the days?
Yes, there's one important one. If you were stuck here due to, like, exceptional circumstances, say, a travel ban during an emergency that stopped you leaving those days, wouldn't count towards the honored 83.
That's fair. Good clarification. Okay, what's the third and final option for individuals?
The third option involves a shorter physical presence, more than 90 days in a 12-month period, but it comes with extra conditions attached.
90 days plus. What else?
Right. First, you need the legal right to live here. So you need to be a UAE national, a GCC national, or hold a valid UAE residence permit.
Okay, the right to reside. What else?
And then you need one of three other things. Either you have a permanent place of residence here.
Permanent place of residence, like owning a property.
Could be owning, could be renting. It basically means having a furnished place, house, apartment, even a room that's continuously available to you, regularly available.
Okay, so 90 days, right to reside, and a permanent place. What if you don't have that permanent place part?
Then the second alternative under this 90-day rule is carrying on employment here in the UAE.
Meaning having a job contract.
Yeah, a formal contract with a UAE employer working under their direction. And importantly, earning most of your income from that job.
Okay. And the third alternative within this 90-day route.
That's carrying on a business in the UAE.
So being self-employed or running your own company here.
Exactly. Engaging in some kind of regular, ongoing, independent business activity, commercial, industrial, professional services, that sort of thing.
Right. So 90 days plus residency rights, plus either a permanent home or a job or a business here. Quite a few options then.
Yep. Covers quite a few scenarios for individuals.
Okay. That clears up the individual side. Now, what about companies? Legal entities? What makes a business eligible for a TRC?
For companies, it's a bit different, obviously. First off, they generally need to be legally established or recognized under UAE laws, incorporated here.
Including free zone companies. Are they eligible?
Yes, absolutely. Free zone companies count. Or, interestingly, even if a company is registered overseas,
Yeah.
it could still qualify if its effective management and control is exercised here in the UAE.
So where the big decisions are actually made day to day.
Precisely. Where the key strategic and commercial calls happen, that location matters more than just the registration address sometimes.
Okay. Are there rules about how long the company needs to have been operating?
Yes. Generally, there's a minimum period.
Yep.
Usually, the company needs to have been in existence for at least 1 year.
1 year minimum.
And sometimes, especially if they're looking for treaty benefits right away, it might need to be a full 12 months to show it's, properly established and ongoing.
Got it. Anything else companies need to show?
They definitely need to be actively engaged in a business activity here, not just dormant. And they need a valid trade license, of course.
Active business, valid license. What about offshore companies? IBCs?
Good question. Generally, offshore companies, international business companies, are not eligible for the standard TRC for treaty purposes.
Why is that?
because they usually lack that substantial physical presence and operational activity that treaties require. They might, however, qualify for a different kind of certificate, maybe a tax exemption certificate, but not usually the TRC for DTAAs.
That's a really important distinction. Okay, so eligibility covered. Let's talk paperwork, the documents. What do individuals need to pull together for the application?
Right, the practical bit. For individuals, you'll need the usual suspects first. Clear copies of your valid passport, your UAE residence visa, and your Emirates ID.
Standard ID stuff. And make sure the name matches the application, right?
Absolutely critical, yes. Name must match exactly. Then you need proof you actually live here.
Proof of address. What works for that?
A recent utility bill like DIWA or SIWA in your name. Or a certified copy of your tenancy contract, your registered ijari.
Okay. And how do they check how long you've actually been in the country for those day counting rules?
For that, you need an official immigration report. You can get this from the Federal Authority for Identity and Citizenship, or sometimes the local immigration department.
The entry-exit report.
That's the one. It shows your movement dates, so the FTA can verify your physical presence, period.
Right. Official proof. What about proving your income?
Yeah, you need docs confirming your income source. So if you're employed, your latest salary certificate.
Okay.
If you're self-employed, maybe your trade license, and a share certificate, if applicable. If you have rental income, the lease agreement for the property.
What about retired people? Or someone sponsored by their spouse?
Good points. Retired folks might need a letter explaining they live off savings or investments with supporting docs. Someone sponsored usually needs the sponsor salary certificate and the marriage certificate.
Covers most bases then. What about bank statements? Are they always needed?
Generally, yes. 6 months of local UAE bank statements for the relevant financial year were standard. However,
An update.
yes, this is a key recent update from October 2024. Bank statements are no longer mandatory for individuals applying specifically under a DTAA.
Oh, that's significant. That simplifies things for many people, I imagine.
It likely does, yeah. Less paperwork for that specific scenario.
Are there any other docs needed depending on which eligibility route you take?
Yes. If you're using that 90-day rule, or maybe stayed less than 90 days but have strong ties, you might need extra proof of that permanent place of residence.
Like what?
Your property title deed if you own the ijari again, maybe more utility bills or long-term rent contract, something solid showing you have a stable base here.
Okay. And what if you're applying for a specific treaty benefit? Any special forms?
Sometimes, yes. The other country might have its own specific tax form that needs to be filled out and possibly even attested, like officially stamped, by the UAE's FTA.
Right. So you might need to handle forms from both ends.
Potentially, yes. You typically upload those during the application.
Okay. Quite a list for individuals, but manageable. What about the documents needed for companies, for legal entities?
For companies, it starts with their core setup documents. So a copy of their valid trade license.
Right.
And a copy of their Memorandum of Association, the MOA. Or if it's a government entity, maybe the decree establishing it.
The basics. What about financial proof for companies?
Financials are key. Usually 6 months of UAE bank statements showing activity, and historically audited financial statements were a big one.
Audited accounts. Are they still required? I thought I heard something about that too.
You heard right. Similar to the individual bank statement change, the mandatory submission of audited financials has also been relaxed recently, especially if the company is applying during its current tax period.
Another welcome simplification, potentially, but always best to check the latest, right?
Absolutely. These things can be nuanced. Always check the current FTA requirements when you apply.
Okay. What else do companies need to provide?
Details on the key people, owners, directors, partners. You'll likely need their immigration reports to show their UAE residence, plus copies of their passports, IDs, visas.
Showing the people behind the company are based here too.
Exactly. And proof of the company's physical presence, usually a certified copy of the office lease agreement or tenancy contract.
Demonstrating a real office, not just a P.O. box.
Right. And you need to show who's authorized to actually submit the application.
How do you do that?
Either with a specific power of attorney, or if the MOA itself grants that authority, that can work.
Okay. Any other common requirements?
Sometimes, for more complex structures, they might ask for an organizational chart. And if it's a government entity applying, they usually need a formal request letter from that authority.
All right. Detailed, but it paints a clear picture. Now, the process itself, we know it's online via Ameritax. Can you, walk us through the actual steps?
Sure. So first step, obviously head to the Ameritax portal, use the official link.
Right. eservices.tax.gov.ae.
Then you log in. You might need UAE Pass or set up an account if you're new or link your old TRC account.
Okay, logged in. Then what?
You'll navigate through the menus, look for something like Other Services.
Other services. Got it.
Within that, you should find the Tax Residency Certificate option. You'll need to select if your company or you have a tax registration number, a TRN, or choose no TRN if you don't.
Important step based on your registration status.
Very. Then you choose the type of certificate. Is it for treaty purposes, for DTAAs, or domestic purposes?
Okay, select the purpose, then fill out the form.
Yep, the online application form comes next. Fill it in accurately. The FTA estimates it takes about 45 minutes, so allow some time.
45 minutes. Good to know after filling it.
Upload all the supporting documents we talked about. Scanned clearly, usually PDF or JPEG format.
Documents uploaded. Are we ready to submit?
Almost. Next is payment. You have to pay the fees online.
The fees. We'll get to the amounts in a sec. Pay online.
Right. Pay the non-refundable submission fee and then the main certificate processing fee securely through the portal.
Okay, payment done, then submit.
Then you hit submit and wait for the FTA to review everything.
How long does the review usually take?
The estimate is generally around 4 to 5 business days, assuming everything you submitted was complete and correct, maybe up to 5 days from when they confirm they have everything they need.
Not too long, though. And once approved, how do you get the certificate?
It becomes available to download directly from your Ameritax dashboard, electronically. Domestic ones are usually e-signed too.
Convenient. What if you need an actual paper copy? Like physically printed?
You can usually request our copy through the portal too. There's an extra fee for that, AED $250 per copy currently.
Okay, extra cost for paper.
Yeah, and they'll courier it to a UAE address. Usually takes an extra 5 business days or so for delivery.
Good to know that option exists. What about those foreign tax forms we mentioned, the ones that might need FTA attestation for treaty use? How does that work?
If it's an electronic form, you can often just upload it with your application. If it's a physical paper form from the other country that needs an actual FTA stamp or signature, you typically need to arrange to submit the physical form to the FTA and then collect it after they've attested it. The portal might give instructions on that.
Okay. Seems fairly logical. Now, let's talk costs properly. What are the specific fees involved in getting a TRC?
Okay, so first, everyone pays that non-refundable submission fee when you apply. That's currently AED 50.
50 dirhams just to submit. Okay. What about the certificate itself?
The cost of the actual certificate depends on 2 things. Are you applying as an individual or a company? And are you already registered for tax here with the FTA?
Right. The TRN status matters. So what's the cost if you are tax registered?
If you have a TRN, whether you're an individual or a company, the fee for the tax residency certificate is AED 500.
500 dirhams if registered. And if you're not tax registered?
Then it's more expensive. For non-tax registered individuals, the fee is AED 1000.
Double. Okay. And for non-registered companies?
That's the highest tier. AED 1750 for a non-tax registered company.
Wow. Quite a jump for non-registered companies. So 50 submission, then 500, 1,000, or 1,750 depending on status, plus the optional 250 for a hard copy.
Exactly. That covers the PRC fees. The FTA has other fees too, like a commercial activity certificate is also AED 500, just as an example.
Good to have those figures clear. Now, validity. How long does the certificate actually last once you get it?
It's typically valid for 1 year, 1 calendar year or financial year, usually starting from the beginning of the period you selected in your application, or sometimes from the approval date. But it's tied to that specific year.
Just 1 year. Okay. So is there like an easy renewal process for the next year?
No, not really a renewal in the typical sense. There's no shortcut.
Oh, so what do you do?
You actually have to submit a completely new application each year, go through the whole process again, provide updated documents for the new period.
Start from scratch every single year. Okay, that's important to know.
Yep. It ensures your eligibility and details are current for the year you're applying for.
And can you apply ahead of time? Like get a TRC for next year now?
No, you can't get one for a future tax period.
Yeah.
It's always backward-looking or covering the current period based on facts already established.
Got it. Reflects status, doesn't predict it. Now, things change, especially tax rules. You mentioned some key recent updates from those October 2024 guidelines. What are the highlights people really need to be aware of?
Yes, those updates are crucial. They brought quite a bit of clarification. One big area was when you can apply.
The timing changed. How so?
Well, for companies' juridical persons, they can now often apply after just the first 3 months of their tax period are over. Previously, they often had to wait until the whole year just finished.
Oh, that's much better. Allows them to get it earlier in the year.
Exactly. More flexibility.
Hmm.
Individuals can still apply as soon as they meet the criteria. And government entities, even sooner, just 1 day into the tax year.
Okay, timing flexibility is good. What about the document changes we touched on?
Right. The two main ones. Bank statements are no longer mandatory for individuals applying under a DTAA.
We covered that, yeah. Big news.
And the mandatory audited financial statements requirement for companies has also been removed, especially if they're applying during their tax period, not after it's fully closed.
Also helpful, but you'd still advise checking the absolute latest FTA guidance before applying.
Oh, 100%. Absolutely crucial. These guidelines evolve. Always check the official source for the current definitive requirements. Don't rely on old info.
Sound advice. Any other key updates from that guidance?
Yes, a couple more. There seems to be a clearer emphasis now on a minimum establishment period for companies.
The 1-year rule.
Yes. Newly formed companies generally need to be up and running for at least 12 months to be eligible. And this might be applied even more strictly if they're aiming for DTAA benefits straight away.
Okay, so new businesses need that track record first.
Seems so. Also, the whole context of the new UAE Corporate Tax Regime.
Right, that kicked in from June 2023.
Exactly. That's made having clear domestic tax residency rules even more important. The FTA's guidance connects the TRC rules with the broader corporate tax framework.
So it all ties together now. Makes sense.
And one final really critical point from the updates
Yeah.
is hammering home the difference between tax residency rules under UAE domestic law versus the rules within a specific double tax agreement.
They are always the same.
They can differ. The definition of a resident, or the tests applied, might be slightly different in a particular treaty compared to the standard UAE rules we discussed, like the 183-day or 90-day tests.
So you have to check both, the UAE rules and the specific treaty rules.
Absolutely. You need to look at the wording of the specific DTA you want to use. It's very case by case.
Wow, okay, that sounds like it could get complicated quickly.
It definitely can. Which is why, honestly, for anything involving DTAs and international structures, getting professional advice from a qualified tax advisor is usually a very, very good idea.
To navigate that complexity and make sure you're getting it right.
Exactly. Avoid mistakes, ensure compliance, maximize benefits.
Okay, that's a really crucial piece of advice. International tax is no joke. So, bringing this deep dive to a close then, what's the headline, the main takeaway about the UAE TRC?
I'd say the key takeaway is that it's an incredibly valuable tool. If you're an individual or a business here in the UAE with any kind of international financial footprint, income, investments, this certificate is, well, pretty vital.
Vital because it helps avoid double tax and boosts credibility.
Those are the big ones, yes.
Yeah.
It simplifies things, saves money, potentially, and just makes your international dealing smoother.
But it's not automatic. You need to understand the rules.
Absolutely. Know the eligibility criteria, which pathway applies to you. Get the right documents together. Understand the application process on Ameritax. Be aware of the fees and know it's only valid for a year.
And keep up with those updates like the recent ones.
Definitely. Stay informed. And remember that complexity we just talked about with DTAAs versus domestic law.
Which leads back to maybe getting some expert help if you're unsure.
Precisely. Don't guess when it comes to international tax.
Right. So do your homework, stay current, and seek advice. Which kind of leaves us with a final thought, doesn't it?
It does. A question for you listening, perhaps.
Go on.
Given how interconnected everything is globally now,
Yeah.
how might really digging into the UAE's vast DTA network and thinking strategically about how and when you use this tax residency certificate, how might that not just solve immediate tax issues, but actually shape your future international financial strategy, your business expansion, your investment approach?
Thinking beyond just compliance towards strategic advantage.
Exactly. How could leveraging this properly open up new possibilities or efficiencies you haven't considered? Definitely something to mull over.